Hey everyone, and welcome back to Everything Tesla Stock. Recently, Raoul Pal, a well-known economist, economic historian, and investment strategist, made an unexpected statement about Tesla's stock price. He said that Tesla might go up significantly in price for multiple reasons. But if you're interested in learning more about Raoul Pal's view on Tesla, then keep watching. Before we get into it though, don't forget to like, subscribe, and turn on that bell notification to keep up to date on everything going on in the world of Tesla. Let's get into the video. Raoul Pal is the CEO and co-founder of Real Vision Group, a company that provides investment analysis and insights to clients on a subscription-based model. Many people call Real Vision the Netflix of finance. Mr. Pal is also a co-founder of Global Macro Investor, a member-only independent research publication focusing on providing information about the macroeconomic climate and insights on how to alter investment strategies in accordance with the macroeconomy. For years, Raoul Pal was a co-manager of a big global macro hedge fund, GLG, and was one of the economists who predicted the 2008-2009 financial crisis. A little while back, Raoul Pal tweeted, "Want to hear the justification for Tesla with a $20 trillion market cap in 2035? You're either gonna love or hate this, or find it interesting. It matters not. I've known Tim for 25 years. He is no sensationalist. Could he be wrong? Sure. Even if he is wrong by 50%, it's a $10 trillion company. Free on YT." In one of his many interviews, he also mentioned that Elon Musk initially prevailed because of the equity market, which allowed him to raise a limitless amount of money. However, this can also explain what is happening right now. Many people are willing to pay any price for such equities as Tesla. Companies that do not require money are doing truly well. This signifies that Tesla's stock price will keep going up with possibly no limit. Regarding Tesla's stock price going higher, Seth Goldstein agrees with Raoul Pal. He said that Tesla is expensive, and Mr. Goldstein also mentioned that he expects Tesla's gross margins to increase in the long run due to the company's ability to lower the manufacturing costs of a unit, as well as the launch of its new subscription software. Raoul Pal has also said that he is far more excited about emerging markets than commodities. According to him, commodity cycles will be less pronounced in the current technology-driven world with an aging population. Many analysts agree that Mr. Pal is going to dominate on this one, claiming that the coming decade is going to be defined by emerging market domination. As we know, Tesla is doing really well, expanding beyond the EV market and becoming an AI company. For example, recently Tesla opened up a gigafactory in Germany, which can be another positive sign showing Tesla's rapid growth. This factory will allow the company to make an extra 500,000 vehicles annually, a significant production increase, as well as a decrease in the costs associated with importing cars to Europe from Tesla's Shanghai factory in China. This also implies selling many more vehicles in Europe to European customers, who might not be as familiar with the brand as US consumers, potentially significantly growing Tesla's customer range. Another important recent event, Tesla started shipping vehicles from its gigafactory in Texas, USA. Beforehand, all Tesla's vehicles sold within the US were made at the company's factory in Fremont, California, which has the capacity of only 500,000 automobiles per year. With the Texas factory, Tesla's going to be able to produce and sell many more cars in the United States as well. In a few years, the company could potentially double its production. Tesla is looking to relocate its headquarters office to Texas, which initiated an increase in housing prices, especially next to Tesla's gigafactory. Elon Musk believes that due to the factory in Texas, Tesla will become a true mass producer of electric vehicles as soon as by the end of the year. Many investors get more and more interested in Tesla and its stock, seeing this positive news about the company, which further improves the sentiment about Tesla. Other events also attract investors' attention to the company. For example, in March, Tesla's stock jumped 8%, which is pretty high. This left the investor wondering whether to sell some stock or buy some more, seeing as it could potentially keep going up. As we mentioned in our previous videos, Tesla is looking to go for a 3-for-1 stock split, pending shareholders' approval. This incident can also have a significant impact on Tesla's stock price in the long run, making it an even more attractive option for investors to buy into Tesla. If you're interested to learn more about the stock split and its impact on the company's stock price, then check out this video. Coming back to Raoul Pal then, he recently conducted an interview with Tim Davies, the director of research at Holon Investments, an Australian company that provides next-generation asset management as well as data storage solutions. In this interview, Raoul and Tim discussed Tesla, its history and future, as well as the company's stock price and what might happen to it in the short and long runs. In that interview, Holon's Tim Davies made the following statement. What do you think is the greatest mindset challenge for entrepreneurs? I believe it is shifting from thinking literally to thinking exponentially. And that's the thing that jumps out with Tesla. People look at the numbers and go like, oh, that can't possibly happen. When we look at Tesla today, that will be close to 900,000 units this year, and we think comfortably they're at 5.5 by 2025. We think 15 to 20 by early 2030, and we see them stretching out to 40 million units by the year 2040. And in a few minutes, Mr. Davies followed with, we actually think Tesla stock is incredibly cheap. Later, Tim Davies also mentioned that they believe that Tesla should cost $3,400 now, which means that Tesla is trading at a third of its value. It's important to remember that Tim Davies is a huge Tesla supporter, and some of his predictions can potentially be clouded by his love of the brand. Therefore, some sentiments made by Holon's Tim Davies in that interview with Raoul Pal can be considered somewhat controversial, as not many agree with him. Looking at Holon Investments' article on Tesla sometime prior to the interview, they stated that their model predicts that global EV sales are going to surge to 206 million vehicles per year by 2050. They also claim that most Tesla competitors are going to fail to keep pace with Tesla as they are drowning in debt. For example, the biggest automobile makers like Volkswagen, BMW, and Mercedes-Benz collectively hold $450 billion of debt. Another important thing that they mention is that the vehicle ownership in India is predicted to go up from 9% to 30% by 2050 because of rising wealth in the country. Holon also forecasts that Tesla's annual cash flow is going to make it to $500 billion in USD in only 15 years by 2037 and $1 trillion by 2047. All these statements hold up to the assumption that Tesla's valuation will be over $20 trillion by 2050. Another investment analyst who supports Tesla is Ryan Brinkman from JP Morgan. He says that Tesla has the advantages of a very unique business model, an appealing product selection, and cutting-edge technology. And he also said that he sees Tesla's products as bold, unusual, exquisite, and immensely exciting to drive. He also mentioned that the company is driven by revolutionary leadership and supported by a functionally strong management team. All this increases the belief in Tesla's optimistic future, which will make the company very expensive and bring benefits to shareholders. The belief of all these acknowledged investors in Tesla's stock increase could be due to the fact that Tesla is doing very well despite the current macroeconomic situation, geopolitical situation, and ongoing COVID crisis in China, where Tesla has also got a factory. In Tesla's report that came together with the company's quarter results, we saw the following. We achieved our best ever net income, operating profit, and gross profit. We also achieved an operating margin of 14.6%, exceeding our medium-term projection of a low teens operating margin. In that report, they also mentioned that they were able to reach profitability in the third quarter, despite the average price falling 6% year over year. They believe they were also able to stay profitable due to the move towards lower price automobiles. All this data gives hope to the investors, improving their sentiment and supporting statements that Tesla's stock price is going to keep climbing. Let us know what you think about Tesla's future stock price. Share your forecasts in the comment section down below. Thank you for watching, and while you're still here, go ahead and click one of these two videos on your screen. See you there!